Jens Wenge Peterson came to Montana in 2004 as an agriculture exchange student from Denmark. He fell in love with his now wife of 18 years and put roots down on a little over 500 acres in Daniels County. Now he grows crops on thousands of acres as an American citizen.
I just thought this country over here fit me better. So we made a life, you make a life where you are.
Like many dry land farmers in Montana's northeastern corner, he harvested a pulse crop this year. You probably know pulse crops by their specific names: dry peas, lentils, chickpeas, and dry beans. Farmers here are putting these dry edible seeds in rotation with other crops to bolster their bottom line and to boost soil health. Last year, prices on pulses were good, but when Wenge Peterson planted green peas and lentils at the beginning of this year, he wasn't sure if those good prices would prevail another harvest.
Last year we were selling lentils from anywhere 38 to 45, some of it even touched 50 cents a pound. Right now we're down about half of what it was last year, right? So that's a pretty gnarly hit on the market.
In 1998, there were around 11,000 acres in the state, and today there are more than 1.5 million acres. But pulse crops haven't been as much help in 2025. Prices are down, costs are up, and farmers are feeling the pinch.
I think it would be very challenging to try and start from the ground up now, simply because of the higher input cost, the equipment cost. Since I got here, land prices has almost tripled. Land rent has at least doubled, and our commodity markets has not followed.
Down the road, third-generation farmer Toby Tate is reeling with higher costs too. And now another expense: tariffs.
And we had to go get a windshield smell for that sprayer back there, and got hit with a 30% tariff because the windshield was made in China. You know, and then when you're looking at it like a piece of equipment, it's they're not cheap, and you get hit tariffs on some of that stuff. It's no one's gonna buy because there's too much of it's gonna go to tariffs.
Tractor and combine sales were below average again in 2025. And as the Trump administration wields tariffs, commodity prices for U.S. crops have fallen in the uncertainty. Some of the nation's top trading partners retaliated with tariffs on U.S. goods, and many countries have reduced their imports from the U.S. And Montana farmers say cuts to food aid programs like U.S. aid have eroded a reliable domestic buyer. Montana Pulse Crop Committee Chairman Paul Canning, another fourth-generation farmer operating outside of Flaxville, says it's making business harder.
It's frustrating that we don't have trade deals, long-term trade deals. It's frustrating that things seem to change, quickly and all the time. All of us, we're business owners, and every business owner wants to be able to project what's going to happen and plan and forecast. And it's really tough to plan and forecast when there's constant change happening with trade issues or inflation or inputs or commodity prices.
Farmers are planting more crops than ever before, but their profit margins are trending down.
I think that it may be difficult to turn a profit next year on pulse crop. There's things that can change in the next few months, but it'll be difficult. The margins aren't what they were a year ago. So but it's not just in pulses, it's that way with oil seeds and cereal grains also.
Ag markets are naturally volatile. That's why there's government insurances to help farmers survive when prices drop or something like a hailstorm wipes out production. But Eric Belasco, a professor of agriculture and economics at Montana State University, says trade war risks don't neatly fit into the traditional revenue protections.
The timing is a bit different than what most risk management tools are used to hedging against.
How do you manage that risk then?
Yeah, I mean that's the tough question. It's not as easy to manage that kind of risk, and that's why you've seen calls for like disaster aid, because it's really a frustration of farmers where there's all these risk management tools and none of them really quite fit that well.
That's why on December 8th, President Trump announced a $12 billion aid package for American farmers.
$1 more billion figure.
We looked at how they were hurt, to what extent they were hurt. We did a very, steady progression of charts, and we figured out a very exact number, and it was about $12 billion.
The U.S. Department of Agriculture says most of that money will go toward one-time bridge payments to American farmers in response to temporary trade market disruptions and increased production costs. It provides some short-term relief for farmers amid shifting trade policies this year. The administration attributes these revenue losses to foreign competitors engaging in unfair trade practices that impede exports.
The tariffs are taking in, hundreds of billions of dollars, and we're giving some up to the farmers because they were mistreated by other countries for, maybe right reasons, maybe wrong reasons. They weren't. They were trying to show us something, and it's really worked out really well. But because of the tariffs, this is possible.
But Montana Farmers Union estimates that American farmers are facing more than $40 billion in losses because of tariffs. Even with aid available for those growing major Montana crops, many farmers say their confidence in the market is wavering. Some even raising concerns that political rhetoric may be adding to market validity.
We could talk markets all day long, and then a tweet could come out and it could change the whole market plan. It's not supply and demand action, it's just words right now. My recommendation for you to weather that storm isn't the best recommendation. But start putting steel in the air and start filling it. Sell what you need to, pay your bills, and just hold on to it as long as you can.
Putting steel in the air means grain bins for long-term storage, but tariffs are impacting steel prices too. For short-term storage, many farmers put their crops in these long plastic sleeves. But this comes with additional risks from weather and wildlife. And beyond storage costs, many farmers are operating with loans, and interest rates are high.
Putting off that revenue, potentially for another year, you're also taking on some additional risks of, the crop going bad while it's being stored. And even though prices aren't great, they could decrease from that. But there is this sort of, cyclical effect where, you kind of need the revenue to pay off the loans to get ready for the next year. That happens, every year in agriculture.
So what about next year or the year after that? Economists and farmers say good relationships with trade partners are the foundation of a reliable market.
Creating these overseas relationships takes many years. It's a very competitive environment. And if the U.S. reveals itself to be somewhat of an uncertain provider of those commodities, then countries will look elsewhere. So that even when the U.S. goes back to being a stable trading partner, those other trade relationships have already been established. And the U.S. is a very competitive producer of most ag products, but there are also other countries that are trying to compete with us every day.
And in Montana, Department of Agriculture Director Jillian Street is also looking for new opportunities for the state.
You are watching Montana Ag Live, originating today.
That's why we were doing the trade missions to Tokyo and Japan. It was very timely, and going to those marketplaces and showing them that Montana is still here. Going to Panama, going to Colombia, going to Peru, we're working on creating new marketplaces, and so. While it is difficult, we really want to push the business-to-business relationship because the government sometimes can get in the way. But business-to-business and that long-term, long-lasting consistency matters.
Consistency in ag communities like Flaxville grows in the fields. These stately grain elevators have stood for more than a century. And all along Montana Highway 5, the ebbs and flows of the ag business are on display. The relics of a different era and the investments in a new one, which now sometimes looks like a pulse crop.
Every operation has to figure out what works for them. I think we have learned over the last 30 years that integrating pulses into your crop rotation is good for your farm. It helps out with the finances generally, diversifies your risk on your market, does great things for soil health. and has done great things for local communities, right? Because now we have pulse processors all along the High Line. Most of them are family-owned operations, and they've brought jobs to small towns and led to some rural economic investment.
But this potential solution to improve farmers' bottom lines and their fields can only be successful if there are buyers for U.S. pulses.
That'd be my biggest fear now, that if there's, with the pulses, if there's so much going on the tariff side that it's shocking our market, is our importers really going to want to work with us continuously to figure this problem out? Or are they just going to say, well, then we'll just go somewhere else?
For Impact, I'm Hannah Kearse.